Okay, now we are recording, and welcome again, everybody. I'm Larry Walters, and we're getting started with our end of our 6th year of doing the Understanding the Fair Tax webinars. We've all heard about the complexity of the flat tax, I should say, and some of us, if we're new, may be wondering, well, how complex is the income tax system? This chart came out in January of 2014, and it shows that we had just under 75,000 pages to comply with to be able to understand and do a tax return that is accurate. Unfortunately, it's impossible to do that. It's impossible to be accurate unless you are doing the most simplest of tax returns. So that being the case, it's time we got rid of this. We've had it for 102 years now. This is the Income Tax Code of 1986, and there's already been over 320 some odd pieces of legislation entered in the new Congress to amend the Income Tax Revenue Code of 1986. So with over 14,000 changes already in the works or already in place, we don't need it anymore, and we want to get rid of it as quickly as possible. So why? Why is it so bad? Well, unfortunately, the current tax code is just extremely convoluted, as illustrated by that chart that I just showed. And because of that complexity, it punishes growth and expansion of our economy. It is because it's so difficult to wade through, it makes it difficult for companies to make decisions on what they would like to do to improve their business. It punishes growth and expansion because of that complexity, and it inspires the wrong behaviors. Companies and very wealthy people spend billions of dollars trying to find ways to ease the income tax burden on themselves. There is no transparency in the income tax whatsoever. Everything is buried in loopholes and in taxes that are in the price of everything we pay on a daily basis, which is another issue that the fair tax people had with the income tax system. No transparency. It is extremely inefficient. Why? Because of its complexity. It takes billions of hours, is what the studies have found, of research to be compliant as possible with the federal income tax code we have today. It impedes our privacy. It simply means that we have to tell the IRS everything about us financially and personally so that we can support the financial claims we're making. The income tax picks winners and losers. It's simple for Congress, especially because of the complexity, to create new legislation, new loopholes that are good for some but not good for others. And it's not a zero-sum game, but the complexity of the system just wears you out, really. And whenever a lobbyist gets enough congressmen to support a change that they would like to get on behalf of their special interest, that change means the Internal Revenue Service are going to take in a few less dollars, a few less $1 million or $1 billion, and that has to be made up somewhere. And it's made up by some little facets of that change, that loophole, that collects more money from other people. Most of the other people are you and I. And the income tax is an extremely intensive, time-intensive and laborious piece of work. It is not something that any of us enjoy doing, unless maybe you just are a masochist and you like torturing yourself mentally with the kinds of regulations that you try to work your way through. If time permits, I'll tell a story a little bit later on of a personal experience I had in conflicting rules that the IRS regulations had in a situation of purchasing a home. So, going on, what's the alternative? Well, we think the alternative, the best alternative, is not a flat tax, not a flat income tax anyway, because an income tax will never remain flat. 102 years, we have enough history to know that it will never remain consistent, and the rates will never stay the same, and there will always be some new way for Congress to find more money that we have to pay, whether it's in raising rates or in eliminating deductions or reducing the amount of deductions by putting some kind of a threshold or means test on them. It's even what happened in the 1986 tax reform. They lowered the tax rates from, I think it was 9 to 2. We got 6 today, no, or 7 rather, 9 to 2 tax rates, but they also eliminated some deductions entirely, and they added thresholds to other deductions. For example, your medical deduction. We used to be able to deduct all of our medical expenses and not have to pay tax on those dollars. Then they made it a percentage of our adjusted gross income had to be exceeded before we could deduct any medical expenses. And they did the same thing with charities and some other issues also. So the fair tax, we think, is a much better plan. It is a simple plan. Not only is it simple in understanding, but it is simple in its writing. It's only 131 pages, double-spaced for that matter. And each and every one of you ought to, at one point, if you haven't read it, read it. And if you have read it, and it's been over a year, it would be a good idea to review it again. You'll pick up some new information. It's just like going to see a movie for the second time, and you're watching the movie, and all of a sudden, I don't remember seeing that, but you did. You just missed it the first time for one reason or another. Reading this legislation, HR 25, will be the same way. Every time you go through it, you'll find something else that you didn't realize you had read previously. Okay, the fair tax, it supports growth as opposed to the punishing growth of an income tax. The fair tax is a consumption tax, not an income tax. We only pay taxes on what we spend, not on what we earn. Makes it much simpler when the only place tax is collected is at the retail cash register, and not from your living room or your den every year, sweating out April 15th, which is now just around the corner, I will remind you. Additionally, the fair tax eliminates all federal income taxes, everything. Now, why do we have an income tax system? Well, this is the reason, ladies and gentlemen. Back in February of 2013, 102 years ago this year, the 16th Amendment was passed, and it simply reads, the Congress shall have the power to lay and collect taxes on incomes from whatever source derived without apportionment among the several states and without regard to any census or enumeration. Those three statements, whatever source derived, without apportionment, without regard to census or enumeration, were literally stricken from the Constitution by this amendment. The Constitution that protected us from garbage like an income tax. So, that's what the 16th Amendment does. What does the fair tax do? The fair tax, through sister legislation, initiates the process to repeal the 16th Amendment so that income can never be taxed again, not without another amendment to the Constitution. And I would hope that now, after 102 years of an income tax, and just a few years we get to live under the fair tax when it is passed, no one will ever agree to allow their state legislators to pass another income tax. If they do, they deserve the punishment they will get. What are some of the benefits of the fair tax for business and trade and the federal government? Well, currently we have $11 to $13 trillion in global personal and corporate assets that are parked offshore, and they would be attracted back to the US of A. They're out there to protect themselves from the abuse of income taxation. And they will stay there until our tax system is changed and gives them some leeway. Well, under the fair tax, that money will no longer be taxed. They will no longer be punished for that. And it can be returned without them suffering a high tax punishment. The U.S. will become a corporate headquarters, a haven for jobs. and for companies to bring their businesses here. No longer will we be suffering the, what's the term, that Burger King just did. I forgot the term already, but where they merged with a company up in Canada in order to put their headquarters there and face life with the Canadian tax system instead of the U.S. tax inversion, the U.S. tax system. That will become a thing of the past, and those companies will be free if they choose to bring their corporate headquarters back to the U.S., which we know they will do because under the fair tax, there are no corporate taxes. There are no business income taxes unless you sell at retail. The underground economy, estimated at over $2 trillion now, they will pay their full share. Why? Because simply, we're not collecting on income. We don't care where they get their money from. When they buy stuff, we'll collect their tax. Okay? What about transparency? Well, the income tax we know is not transparent. The fair tax is totally transparent. There are no loopholes. The fair tax is only one tax, a tax on consumption, a tax on new retail goods and services. And I emphasize new. And that also says, without saying, if we're only taxing new, we are not taxing used goods. So if you want to save some money, you want to avoid paying the fair tax, you can participate in buying used clothing, used appliances, used furniture, cars, boats, whatever. If it's used, it's not going to be taxed under the fair tax. One of the premises under the fair tax was to eliminate the multiple taxation of the dollar and of goods or services. So that's a big benefit of the fair tax. What else? Well, the fair tax rate is 23% national retail sales tax rate, and that will be posted on every receipt you get. Now, before you choke on a 23% sales tax, hold on, take a deep breath here. Please know that the great majority of us will have an effective tax rate of from 0 to about 11%. That will be substantially less than what we are being taxed under the income tax system. Efficient, simple to collect. The states will collect from the businesses, and already 45 states have sales taxes and administer them and enforce them very well. The states are very close to the businesses in their state, and they pay close attention to what's going on from their businesses, and they can tell when a business is making reports of sales that are out of line for their type of work. Okay? The states will collect from approximately 18 million businesses, opposed to the 120 million tax returns that the IRS tries to process today. Only businesses that sell to the end consumer will collect the sales tax and remit it to the State Department of Revenue. Only one state sales tax form to file. That simplifies their life a lot also. It has been stated in reports by economists who have done the research that under a national retail sales tax with just a single point of collection, it will reduce the compliance costs of the tax system over 90%. So right now, compliance costs are in the $400 billion range. It'll be less than 10% of that under the fair tax. And states and retailers will be paid 0.25% for a collection of the national sales tax. That's an administrative fee being paid to them and that they withhold from what they pass on to, in the case of the retailer, they pass it on to the State Department of Revenue. And in the case of the State Department of Revenue, they pass the sales tax on to the Department of the Treasury, the United States Department of the Treasury. Okay. Still under the efficient and simple to collect category. The IRS costs us $13 billion to operate annually. It was, that's close enough. It was $12.8 billion in 2014. And the IRS only collects about 75% of the taxes that are supposed to be collected. Not because they are unwilling to, but because people shelter somehow or another, don't report or underreport their incomes. That's the underground economy for a large amount. Also, because of its lack of efficiency, it's so complex, and the cost of the IRS is so much, it costs approximately 25% or 25 cents for every dollar that is collected by the Internal Revenue Service. The fair tax? The fair tax eliminates the IRS. It abolishes it entirely. The IRS will have 3 years to close out active prosecutions of tax evasion. After that, their budget goes to zero, and there is no more Internal Revenue Service Department. Now, a lot of those people will transfer into other departments within the government. Some of them will take retirement. Others will go into private industry. We don't know just where the split breakup is going to be, but we do know that the IRS will no longer be as we know it today. And in its place, there will be a Department of Sales Tax Collection, and their only job will be to administer the 50 states Department of Revenue Services and help coordinate their activities in collecting and remitting the new fair tax, the new sales tax. Okay, so I hope things are coming across fairly clearly thus far. Let's see what else we got to work on here. How about privacy? Privacy is protected under the fair tax. We've seen a little bit about the efficiency. Under the fair tax, you will pay your taxes when you make purchases. There are no filling out detailed income tax forms. In fact, just to repeat it, and I may say it again, no one in America will have to file a federal income tax return again once the fair tax is implemented. Well, that's not quite true. The year that the fair tax is implemented, we will have to fill a tax return for the previous year, and then we're done for life, folks. It's gone. How about that? Now, let's see. What about being fair versus choosing winners and losers? The fair tax has a prebate, which assures that no one will pay federal taxes up to the poverty level on the necessities of life. What does that mean? What's this prebate thing you're asking? Well, let's talk about the prebate. Here's a table that shows the 2015 prebate. These annual consumption allowance numbers are issued each January by the Department of Health and Human Services. And under the fair tax, those consumption allowance numbers will be calculated using the tax rate of 23% right now. And each month you will get 1/12 of the $2,707 if you're single in the annual prebate. This is like the tax exemption that we all have on our tax forms today, except you'll get it monthly and you will get it in advance. And as I pointed out, a single person will have an allowance of $11,770. That's a calculation done that says if that's how much you're spending, all you are able to afford are the bare necessities of life: food, shelter, clothing, basic transportation, and medical services. If you're a married couple, there's no marriage penalty. A married couple will get twice what a single would get, $23,540. And so you'll see a check in the mail administered by the Social Security Department of $451 each month. And if you're a married couple with 2 children, then you see $611 each month. And all that $31,860 is it says that when you're spending that much money, and that's all you're spending, you're living at the bare necessities of life. And I can't imagine that's very comfortable. I don't know if I've done that. I don't think I have, but I've had a little bit of fortune in my life, and I'm sure many of you have also. And maybe you don't know what it's like to live on just the bare necessities and some help from the federal government or the state government. But this is what the fair tax provides. And essentially what it's saying is that it doesn't matter what that number is of the annual consumption allowance based on your family size. It has nothing to do with your income. And I mentioned earlier that the large majority of us would have a tax rate of 11% to 0 to approximately 11%. Let's just double any of these numbers here. Let's say you're a single person with 5 children and you're spending $32,570 to get the bare essentials of life, and you're getting your monthly prebate of $624. If you spent twice that much, okay, and you do the calculation, you would find out that your effective tax rate for that expenditure would be 11.5%. Still less than what it is under the income tax system. When you consider that just Social Security and Medicare being withheld from your paycheck is 7.65%. And then income tax on top of that would just add to the deductions from your paycheck today. So we're going to be in good shape, folks. We're going to not only have a tax system that is fair and easy to deal with, but we're going to have more consumable income, more income available for us to spend as we see fit before the government gets its share. What about the impact on prices? Well, business income and corporate taxes right now are passed off to the consumer. And research has found that the embedded taxes that are in the price of everything we pay average about 22%. Actually, it's from 20 to 25% depending on the industry, but 22%, 22.5% is a good average. Under the fair tax, these embedded taxes are eliminated, and then the fair tax is put on the cost of goods in its place. Now understand what this means. Under the income tax system, every company, every business that has anything to do with getting a product or a service from its sources to the retailer adds their overhead and their taxes and compliance costs to their cost of doing business before their profit margin is added. So that gets dominoed through the supply chain until it gets to the retail seller. Under the fair tax, those taxes go away, and the cost of goods and services is not impeded by the embedded taxes that are being collected, because there are no taxes being collected and there are no compliance costs on businesses that are only supplying to other businesses. When it gets to the final business, the one that sells to the end consumer, then the tax is added. Retail prices are going to rise some. Many of us used to misstate this. We used to think that because 22% went out, 23% came back in, that the prices would remain the same, but we were wrong in doing so. We are estimating, and it's very hard to put a concrete number on this, but we are estimating that prices will go up from 5 to 15%, depending once again on the industry and on the business. No two businesses have the same expenses, even under the income tax system. And if you take as an example, a very extreme example here on both ends, take one person producing one item of good per year. 100% of that person's overhead costs and 100% of the business's overhead costs go into the cost of that one item that was produced that year. Now let's take that same business, that same one person, and let's presume that that one person produces 1,000 items per year. Now, all of the overhead of not only the business, the insurance and the rent and all of that stuff, electric, and the employee, which is probably the business owner, all of that overhead is divided by 1,000. So the prices only go up 1,000th of the total overhead. That's a large extreme from 100% of the overhead to 1/1000th of the overhead. And if you can follow that example, you'll understand why it is impossible to predict exactly where prices are going to go. However, income, more importantly, disposable income, will rise more than the cost of goods, even if they went up 15%. Because as I may have mentioned, the average worker in America will realize an increase in take-home dollars of 29%. Now, who opposes the fair tax? Well, anyone whose income comes primarily from the current tax code, from the complexity of the current tax code is really what it amounts to. And some of those people are the lobbyists, those people who are extremely highly paid. They live in Washington. They're referred to as the K Streeters, K like in kitten, and they are paid to influence who? Our politicians, the congressmen, and the senators for tax favors. Tax favors for who? For whoever their clients are. We generically refer to them as special interests. Those are the ones that fight for loopholes or tax exemptions of one kind or another. Those people are highly opposed to eliminating the income tax system. They're not opposed to the fair tax. They're opposed to eliminating the income tax system. You know, our politicians that run for re-election, they get thousands of dollars in campaign contributions from lobbyists for supporting causes that the lobbyists are promoting. That goes away under the fair tax. What else? Who else would be opposed to this? Well, how about those employees at the IRS? The IRS workers will be losing their jobs. And you know what? I totally understand them being opposed to the elimination of the income tax system. I would be too if I was one of them. But needless to say, right now, they can be very honestly looked at as a burden on society. They are a burden on our economy. And after the last year and a half or so, we know that they are used corruptly, not only by the Democratic administration, but by Republican administrations. So we just cannot trust our politicians. And if you think about it, if you've researched any of our American history, going back to our founders especially, you'll see that we were warned about things of this nature, and the Constitution was literally written to protect us from things like this, corruption in politics. And in fact, when Benjamin Franklin was asked what kind of a Constitution has he given us, he answered, a republic if you can keep it. It's a government of the people, by the people, and we have got to do more to be sure that our government is doing what we expect them to do. And I don't mean by getting more entitlements either. I mean by doing what's right. Well, what else? Some accountants are going to be upset about this because they're primarily interested in doing tax returns. I can understand that also. However, I've got to tell you, in many instances, I've done presentations and I've talked to people at various events where we've had our booth, and we've had tax preparers and accountants talk to us, and they tell me that they are supporters of the fair tax. They will be happy to see the fair tax, the income tax disappear. One of the reasons is because they see the cheating that is done by their clients. They can't do anything about it because of the privacy rules. They have to just take what the client gives them as the truth and process that information. As far as the accountants, they're sick and tired of having to keep up to date with the ever more complexing income tax code and regulations. So they've got classes that they need to attend, and they've got subscriptions that they need to buy just to be able to stay current with what's happening with the income tax system. They're tired of that. And then there's the final straw, if you will, and that's having a client be called in for an audit. And they have to go and be with the client and help protect him and explain why he filed a tax return as he did. So, I don't know, some accountants, they're not going to be happy about it, but a lot of them are. And I've got to say that as far as accountants and IRS workers losing their jobs, if they're smart enough to do tax returns, if they're smart enough to be IRS agents and IRS processors, tax processors, then they're smart enough to do real accounting. They're smart enough to do real administrative work, and they can find another accounting job, or if they choose, they can change their careers. Most of these people have degrees. The accountants certainly do, and most of the IRS workers certainly have degrees and advanced degrees. They're smart enough to do something else if they choose to, if they're tired with this career. Some will retire, Some will transfer, but they'll all have something else to do. It won't be looking at income tax returns. Okay, so where do we go from here? Well, let's see. How about if we take a little break and we'll answer a few questions. Let me get over to the question board and see what we've got going on here, if anything. I don't see any messages. I don't see any questions. My microphone has been on. There's a question. Okay. Something's going wrong. We're going to go to the question pane, and Mr. Tim is asking, how will the income level be established so the prebate can be calculated? Okay, once again, Tim, income has nothing to do with the prebate. You can make $1 trillion a year, and you can qualify to get the prebate based on the size of your family. The prebate number is one that is calculated each year by the Department of Health and Human Services, and it's based on what they find it takes to purchase the absolute necessities of life, regardless of what your income is. And it's as simple as that. It can't get any more complex. Income has nothing to do with it. All right, let's see what else we got going on. Any other questions? No. So either I'm doing such a terrible job nobody can follow what's going on, or it's been so good that everybody understands it entirely. Well, here's one more. Bill is asking, when do you expect our government to pass and implement the fair tax? I expect that to happen, Bill, when we have enough of a grassroots organization around the nation, across the nation, to frighten enough congressmen out of their lush seats in Congress to know that if they don't pass the fair tax, that they will not get reelected. This is strictly a fight with the Congress by you and I, John Doe's America. And it's up to us. So we have to teach more people about the fair tax, and we have to communicate with our congressional representatives more frequently if they're not co-sponsors, asking them why, what's holding them up, what is it that they love so much about an income tax system that prevents them from advocating for the fair tax, and let them know that they're not going to get any support from you, either financially or with their campaign. In fact, you will campaign for and help some candidate who will support the fair tax. It's as rude and as crude as that, Bill. Thanks for that question. Next we've got from Joseph. And Joseph is asking, what language is in the fair tax law that prevents or discourages Congress from making the prebate a progressive system down the road? Actually, nothing at all, Joseph. The Constitution itself, in Article 1, Section 8, gives Congress the power to lay and collect taxes, and they can adjust the prebate level. In fact, the prebate level is adjusted every year anyway by the Department of Health and Human Services when they issue their new numbers, their new consumption level numbers. However, the tax rate could be adjusted by Congress just like the income tax rates can now. The only difference is that with the income tax, Congress can adjust the tax rate for corporate taxes. They can adjust the tax rate for capital gains. They can adjust the tax rate for the alternative minimum tax. They can adjust your and my tax rate. They can spread it around so that the rate that they're adjusting will affect a small portion of the paying public, and the larger portion not being affected won't say anything about it. Well, they're not bothering me. I guess I'm okay. But next year or the next time, it'll be our time to be in the bucket and get the shot. Under the fair tax, because it is administered uniformly to each and every one in the country, any changes that Congress wants to implement will affect each and every one of us equally, immediately. And I would hope, as I had mentioned earlier, that we will get off of our assets and let Congress know that either yes, we accept this particular tax increase because Congress has presented a real viable reason for it, such as a war, or Congress, you better back off this one, otherwise we're going to vote every one of you out this coming election. But it is up to us. We have to stay tuned to what's going on, and that's the only thing that will prevent it. Thank you for that question, Joseph. Now we got Ron asking, how many bills currently submitted to amend the tax code? I don't have those exact numbers in front of me, but if I recall right, it was 166 bills in the Senate and 230 something in the House. So something in excess of 300 tax bills legislation in the two bodies of Congress right now. And thank you for that, Ron. I'll get that number. If you want to email me, repeal_16@earthlink.net. I will give you those exact numbers. I'll send those exact numbers back to you. And that's as of March 17th. Those numbers are good as of that date. I don't know what might have been submitted since then, if anything. Okay, I think we've got all of the questions at this point. So, oh, there's one more. All right, Mr. Tim is asking, does this only replace income tax, or are there other taxes that will be eliminated? Yes, it only replaces income taxes, plural. That's every income tax that you can conceive of. It eliminates the personal income tax and the corporate income tax. It eliminates the Social Security tax. It eliminates the Medicare tax. Social Security and Medicare will be funded by the 23% sales tax. It eliminates the alternative minimum tax. It eliminates the capital gains tax. It eliminates taxes on interest, taxes on dividends, you name it. Right now, if you're paying tax because you're taking distributions from a retirement plan that you participated in, you contributed to, that was tax deferred, you're paying tax on those distributions you're getting today. Under the fair tax, those distributions will not be taxed. You get a windfall on those items. Okay? So I hope that's clear now, Tim. Thank you. John is asking, please show how our real percent fair tax we will pay is figured. The maximum percent should only be changed by 2/3 of the population. Please show how our real percent of fair tax we will pay is figured. The maximum percent should only be changed by 2/3 of the population. Okay, the population itself, although it participates in the calculations for the taxes, it doesn't mean that an infant, for example, goes to the cash register and buys something and pays tax on it or not. The family unit, whether it's a single person or a single person with children or a married couple with children or an adult couple living together with children. It doesn't matter what the family organization is. The rules are the same. Their consumption allowance is calculated each year and published by the DHS. We take the tax rate, we multiply the consumption number by the tax rate, so in this case it's the $31,000 something for a single by 23%, and we get the annual family consumption allowance, and that gets divided by 12. That's exactly how it is calculated. Now, when you spend up to that much money, you have effectively had zero tax liability because you were reimbursed in advance for the tax you're going to pay on the bread and eggs and milk and fuel and stuff like that, okay? So you had zero tax liability up to the consumption level for your family size. When you start spending more than the family consumption level, then you will start contributing to the federal income tax system, or federal revenue system, not income tax, I'm sorry. That contribution will be very, very small initially because the first, for example, $31,000 you spent was tax-free. The next $31,000 you spent, you're paying 23% on. But if you take those two 31s and you put them together, that's 62,000 something. You've paid 23% on that entire thing. Divided by the 62,000, it comes up to 11.5% because you only paid 23% on half of that amount. I hope that's clear. If not, ring back in again, John, and I'll try and do a better job in answering that, or maybe somebody else will have a better answer for it. John just said John. I don't know what that's about, John. Maybe you hit the send key before you meant to. Bill is asking, does the fair tax eliminate inheritance tax? Yes, it does. It eliminates the inheritance tax as well as the estate taxes. Every tax that under the income tax system is levied is abolished. Every tax on any kind of income under the income tax system is abolished. Okay? Now I think we've caught up with it. We'll take one more peek through the table here, and it looks like we're ready to go into the special topic. Outstanding. Thanks so much for those great questions. They were super. Let me clear that from my screen and see if I can move on to our next thing. Special topics. How about that? Okay. Our special topics. What is the impact of the fair tax on small business? Well, that's a good-looking hammer there, isn't it? The impact on small business. Listen, compliance costs. The cost of compliance is the hardest on small businesses. Research that was done and surveys that were performed have found that small businesses pay a much larger percentage of their gross revenues to comply with the tax system than the taxes that they're actually paying. And based on a comparison to their revenue, a much larger percentage than larger businesses do. They've calculated that a small business pays on average $74 an hour in order to comply with the income tax system. Also, of those surveyed, 91% reported that taxes are their number one burden in conducting their business. They have said that they got into business and they're in business for themselves to do 1% of the thing that they love to do and 99% of the stuff that they really don't like to do. And most of that is on the tax system. Under the fair tax, they're asked one question. How much did you sell to consumers? Remember, only businesses that sell to the end consumer have to collect the tax and remit it to the State Department of Revenue. So how much did you sell to consumers? What's 23% of that amount? Subtract any tax credit you might have, and you send your check off and your tax return each month to your your State Department of Revenue. Okay. Now, the corporate income tax is eliminated. Once again, we're going under the fair tax. The payroll and gift taxes are eliminated, and the payroll and gift estate taxes are eliminated. That answers the question that was just asked a few moments ago. So, once again, we're following the process that it is most effective to hear things 2 or 3 times to remember what they are, what it was you were told, what it was you were talked about. Under the fair tax, there are 0 corporate taxes, plus 0 payroll taxes, plus 0 estate and gift taxes. It dramatically reduces compliance costs to less than 10% of what they are today. It's increased efficiencies since the only point of collection is at the cash register and it's done automatically by the computer, turned over to the state once a month, and the state then turns it over to the Federal Department of the Treasury. And it increases consumers' income because they have more take-home dollars, more disposable income. And it provides dramatically larger profit margins to businesses. What's not to like about the fair tax? What can you do to help? Well, simply enough, get involved. Go to fairtax.org or floridafairtax.org if you're in Florida, and learn more about what the FairTax has to offer. Both of these websites have either a library of the FairTax papers from the research that was done and or a pointer to where the FairTax papers are residing. And these are papers that are written mostly by the research economists that were hired to do the studies well before the FairTax legislation was written. There was over $20 million in research done by both economists who specialize in tax issues and marketing groups, private marketing groups, who held workshops and things of that nature with private citizens like you and I to determine what might be a reasonable alternative to the income tax system. And what those workshops have concluded actually is that a national sales tax was the best way to go for two reasons. One, it is the most economical to administer. Two, it is the least intrusive on our private information. Those are two very good reasons, don't you believe? So contribute, give some money. I know we're all running on a tight budget, but golly, this is important. And look down the road a little bit. You know, if you're in your 60s or 70s, you might be thinking, hell, this will never, even if it gets passed in 1 or 2 years, I'll never get much benefit from it. I agree with that. I'm in my 70s, so I can say that. However, I do have children and grandchildren, and golly, I hope I can leave for them a better America than I was left with. And I was left with one that's better than what we have today. America has been declining economically and socially over the last 100 years because of the complexity and the cheating and the corruption of an income tax system. Give some time. Volunteer. If you're in an area that has a local FairTax organization, a local FairTax group, find out who they are. You can go do that at fairtax.org, and they will point you to either an individual or someone in the state that you can contact and find out if there's an organization near you that you can work with. And even if you don't like going to meetings, you can do something from your home on your computer if you would like to help a little bit. I know there is one task that every group needs, and that is somebody to do research to find out where there are clubs and other organizations that hold meetings in their local area that they invite speakers to. And we would love to go speak to those people, introduce them and teach them about the FairTax and solicit their support for this great legislation. So you could do that much. And I'm sure there's other things also. If you like to do typing and things like that, maybe you could do the newsletter for the organization. But please, be willing to give a little time. A couple hours a week is not going to kill you, and it's going to be a great benefit to our nation and to you and your offspring. Start a local FairTax group if there's no local group in your area. I know that's becoming a little bit bold, but golly, it's been done before. I mean, we've got FairTax groups all over the country, just not enough of them yet. So local people have started groups. Usually they start in somebody's house, maybe in a restaurant where they can sit at a table. You go to a Denny's or a Perkins or something like that, a Panera Bread, whatever, and grab a booth or two booths and talk about this FairTax thing. Explain what it is to people and how we need to build the grassroots organization to help get this legislation passed. You can do these things, folks. Most of you have gone through life to this point by talking to people about one thing or another. You sold people on an idea or a product at one time or another. Some of you have sold Scout cookies. Other of you have participated in fundraisers for the Boy Scouts or the church or something. You can do something here too. Bring people to the monthly webinar, the Understanding the FairTax webinar. We have them the fourth Thursday of every month, except November and December. And November's we usually move to an earlier Thursday to avoid Thanksgiving. But I'm sure you understand wanting to avoid Christmas also. We all need a break. But next month in April, we start our 7th year giving these webinars, and we certainly hope that you will be still participating with us next year. Communicate regularly with your elected officials. You don't have to speak directly to your congressional representative or to your state senator. You can call their office and tell them that you have learned about HR 25 or S-155, and you think it's a great idea, and you would like to know, if they're not, why they're not co-sponsoring the fair tax, why they're not advocating to get rid of the income tax system and help our nation's economy, help create jobs, and that if they expect to have support from you, either during their election campaign or financially, they're going to have to support the fair tax legislation. Buy the books. No, don't just buy the books. Buy the books and read them. The Fair Tax book by Neil Borst and John Linder is the first one that was written. Read it. Once you read it, you'll get a better understanding for what I've been trying to talk about real brief tonight. And the second book, the red cover, I don't recall the title on it, that Linder and Borst put out, is an enlightenment on even the first book. So it brings up some topics that the first book did not talk about, and it makes some minor corrections to misspeaks in the first book. But get those books and read them. And I guarantee this, once you've read the books, you're going to want more because you're going to want people you know to read them also. Read the legislation. Hey, HR 25 is not that bad. You won't understand all of it, but what you understand will be important. And when you come back to a webinar or when you're talking to somebody else and they ask a question that you can answer, you can simply say, hey, that's a good question. I'm sorry, I do not have the answer for that. I will get it for you. And when you're done, you get back to your computer, you get on the email system and email me. Email your representative locally, your fair tax people locally, if you know who that is, and ask the question. But we'll get an answer for you, or you can look it up yourself if you want to do that kind of work, which is the best way really, because that's how you learn the system the best. So read the legislation and talk to people. Order supplies. Now, what are supplies? Supplies are cards that you can hand out, pocket cards, bumper stickers, baseball caps, polo shirts that have the fair tax logo on them and on the back, and some have other expressions. There may be mugs. I'm not sure how much our supplies have expanded at this point, but you can find our supply list on the fair tax website, fairtax.org, and then open your mouth. Just talk about it. Learn about it. Talk about it. I guarantee you one thing. One thing. Remember this regarding the fair tax. Understand it and you will demand it. There's no doubt about that. If you put in the effort to understand the fair tax, HR 25 S-155 enough, well enough, you will know that it is something that needs to be done. The biggest challenge I had in trying to understand the fair tax was trying to understand a consumption tax with an income tax mentality. That makes life a little bit difficult. Once I realized what I was doing, and I put the income tax aside mentally and started trying to understand the fair tax for what it was saying it was supposed to do, it got a lot easier to understand. Okay, so from this point, we'll go see if we have any more questions on the board, get those taken care of, and then we'll call it a night, folks. We're going to start off with Bill, and Bill is asking, how are Social Security and Medicare benefits determined? Great question, Bill. Thank you so very much. Once a year, your employer, and if you're self-employed yourself, will report to the Social Security Administration the gross wages paid. And that is so that benefits can be calculated when you're entitled to them. Simple enough, isn't it, Bill? Thanks for that question again. And Tim is asking, at what age will a person move from child dependent to adult for prebate purposes? Okay, first, it is entirely possible that you have an adult who is a dependent. They may have some kind of an ailment which classifies them as such. Okay, they are unwilling or unable to work and create their own source of income. Secondly, the age is 18. Once a person reaches the age of 18, they can become an adult on their own standing and collect the adult prebate as opposed to their parent or their guardian getting the prebate for a dependent. Now, if you have a child who is 18, 19, 20, whatever, and they're in school, you can still keep them as your own dependent and collect that prebate, or you can relinquish that and let them apply for their own prebate, which would be the financially smarter thing to do, and they'll get the full prebate amount as an adult. Fair enough, Tim? Thanks for that question. Next is Wayne asking, when you talk about giving money and volunteering, please remind everyone that there are only 3 paid employees of AFFT. Everyone else is a volunteer. That is exactly true, and thanks so much, Wayne, for bringing that up. 3 paid employees, you heard it. We've got a president, we've got a guy who's been with FairTax, I think, since FairTax was implemented, and he is our grassroots director. And we have a PhD economist, Dr. Karen Walby, who does ongoing research for us. Those are the 3 employees as I know them. Okay, last question. And I deleted it by mistake. I am so sorry. Would you enter that question again, please? I'll hold on here for a moment, give you time to type it in. And meanwhile, oh man, I feel so bad about that. Meanwhile, I want to encourage you to be sure to talk to other people about the FairTax. And if you would like to do a webinar presentation on your own, hey, let us know about it, and we'll help you get it established, get it set up. You can do your own PowerPoint if you'd like to do that, or you can use one of the several that we've created over the years, and we'll help you learn how to do it, and we will be with you. I'll be with you at least, taking care of the controls, and all you have to do is your laptop or your desktop with the PowerPoint presentation and talking your points. Okay, John, thank you again for sending that question in. Let the people vote if they want to increase to 20%, not Congress. Essentially, we're doing that when we put the pressure on Congress, John, because the Constitution gives Congress the power to raise taxes, raise the rates, or adjust rates, let's put it that way, because they could adjust them down also. It's not a matter of it being put to the vote. That is not part of the Constitution. But what is part of the Constitution is us giving our Congress people and our senators such a hard time if we don't agree with the reason that they want to make an increase, that they decide not to do it. We've got to be that strong. It might not be the answer you liked, but that's the only answer that the Constitution allows for at this time. And thank you again for retyping that. So that's about it for now, folks. I'm glad you were here. I hope you got something out of this. And you can contact me, as I said before, at repeal_16@earthlink.net if you have any additional questions you would like to ask or any comments you would like to make, or if you would like to do your own webinar presentation, and we'll be happy to work with you on that. Meanwhile, have a good night.